Is the housing bubble ready to burst? Let's have a look. Hello everyone, Florian.Heise here and welcome to another episode of HeiseSays. Grab your stein of coffee and I hope you're enjoying the tail end of the week. We're over hump day and heading towards the weekend. So I thought we'd have a look at this article from Yahoo Finance, which is asking the question, is the bubble ready to burst? So house prices are boiling hot. Is the bubble ready to burst? And let's bring up just some charts to show you. This is the asking prices. I'll reload this data from SQM. There you go. The weekly asking property prices, the capital city average. Let me bring up full screen so I can see these numbers over here. There you go, 1.12 million. Average 3 better, $1 million. $1 million. This is the capital cities. We bring this up nationally. We can see even there, 3 better at 620, all houses 700 grand with change. So you can see property is getting more expensive. That's. I don't think there's anyone that's arguing that isn't happening. Now the question is it actually a bubble? Let's look at what the definition of a bubble is. Let me just bring this up here. So this is from Investopedia, because we always hear mention properties in a bubble. This is in a bubble. Tesla's in a bubble. Shares are in a bubble. What's the definition? The term bubble in an economic context generally refers to a situation where the price for something, an individual stock, a financial asset, coffee, or even an entire sector, market, or asset class exceeds its fundamental value by a large margin. Now, is property exceeding its fundamental value by a large margin here in Australia? What's property used for? We can live in it. We can procreate in it. You can sometimes start a business in it. You can spend a lot of time in your house, which I find funny. All these people who run off and work away from home spend so much money on their house and never get to spend any time in it, at least until recently. It's a store of wealth. You can hopefully sell it when you want to downsize or retire. There's capital growth. There seems to be continuing demand for property here in Australia. Sure, immigration has disappeared. International tourism and students have disappeared. But we'll see how long that will last. It hasn't actually made much impact on property unless you're talking investment-grade product. Houses are all the rage now. So is it beyond, priced beyond its fundamental values, guys? Are we? That's the question. Is it exceeding its fundamental value by a large margin? Let me have a shot of coffee, and you let me know in the comments what you think. $1 million for a house? Maybe here's another thing we need to remember, everyone. This is what the truth really is. Look at the differences in earning group per household. You got people earning over $2,000 a week, households. Others on just under 1,000 in the middle. Then you've got the poor, the lowest, below 500 at 433. That's why. So for someone over $2,000, for my friends who are skilled in the medical profession, earning good money, they can drop $1,000 a week on rent, and it doesn't affect them. For other people, that could change their entire lives. This is what's happening in Australia, everyone. The classes are becoming more evident now, and lockdowns and COVID restrictions are just bringing that to light. So let's have a look at this article and see if there is a bubble and if it is ready to burst. So concerns are mounting about Australia's red-hot housing market, with experts keeping a close eye on rising debt levels and flagging an imminent decline in house prices. Okay, now how many times have we heard this? How many times have I talked about this? How many times have we seen articles warning about a decline in house prices? And what did we get? Maybe 10%, maybe 20%, and then it recovered. There's a lot of pent-up demand. Yesterday I went to the paint shop. Guys, I had to buy some more of the smart strip that I'm using. This is brilliant. If ever you need to remove paint, lead-based paint, you get this stuff, you put it on the walls, then you put paper on it, and you should probably tape it down, because when I haven't taped it down, it doesn't work as well. You don't want the reactive chemicals to evaporate, and it just comes off just in one go. So easy, and it's non-toxic. No VOCs. Nuts. I can't believe it. So anyway, I was at the paint shop, and I have had trouble finding this stuff because it's really great. And I'm stripping the front of the house now on the side because it's just all peeling. And I've gone to 2 of the Dulux shops, the trade shops, and I was asking them, how are you going? How are you busy? Because I managed to get some containers of this stuff, and they've had to put pallets aside for professional painters that are just flat out. And everyone is flat out. Everyone is busy. Everyone's doing up their house. It's an investment that people put money into. It's a store of wealth here in Australia. I can't see Aussies going to crypto. I can't see Aussies going to gold. I can't see them going to precious metals. I can see them going to land. I can see them going to property. Now, the problem with that is it doesn't lead to innovation. And I honestly think it goes back to our tall poppy syndrome. Anyone trying to better themselves is cut down here in Australia, or at least, not looked up to. We don't have the same culture as other countries. Anyway, calls are growing for runaway property values to be cooled, including from the IMF and CBA chief. The Reserve Bank also indicated it is assessing a range of tools to address financial stability risks associated with high house prices. Now, the RBA are worried that if house prices start to cool off, people are forced to sell, then the banks won't be able to lend as much, and then we'll all start tightening our belts because we're borrowing 6 times our income plus, and it will just feed upon itself. That's what they're scared about, that the velocity of money will slow right down because we won't be spending. They want to keep people spending. They don't care about house prices. They'd just be happy if wages keep going with it, so it's not as unreasonable, but that's what they're really worried about. Treasurer Josh Frydenberg yesterday signalled a clampdown on growing levels of household debt and has discussed the issue with Australia's financial regulators. So with house prices rising for more than 12 consecutive months and hitting record highs, the question is, are we in a massive property bubble? So there we go. Is our property, the value of property inflated above what it's fundamentally worth? Now, what would that be? Think about it. What's in a house? You've got the land, you've got the materials, you've got the labor and skills to build it, you've got ongoing maintenance, you've got earning potential, you can depreciate the property over time. So is it? I think a lot of it's the land, to be honest, going up in value. It's not my house that's gone up. It's the cost of a block near the city. And now I'm not even that close to the city. So what qualifies as a housing bubble? It's very difficult to classify the current housing market upswing as a bubble, CoreLogic head of research Eliza Owen told Yahoo Finance. Bubbles are often characterized by high levels of speculation, which isn't as evident in the current upswing. Real estate speculation is when buyers purchase properties when prices are low and sell at a higher price. When thousands of people do this at once, prices are pushed up. According to Owens, the bubble label is often applied retrospectively. Often bubbles cannot be identified until they pop, she said. On top of that, bubbles are often associated with financial instability. She added, but that's not what's happening right now. The Australian banking system has very strong capital ratios, and a decline in house prices is unlikely to destabilize this. Now, this is the issue, guys. This is the big thing here. We don't need to worry about a run on the banks as much, or the banks having to be, bail in everyone. Honestly, I honestly think the real issue is we just need to make sure people have enough liquidity buffers to last until government intervention. Because, come on, the precedent's been set, guys, hasn't it? It's been said. They don't worry about government debt. It'll become a political football. Our GDP's growing below trend. We've had a recession. Debt's to the moon. Some people are doing better than ever before. This isn't what happens in recessions. And everything's getting more expensive. So real estate bubbles are usually driven by huge amounts of speculation. But there are actually really good reasons why house prices are rising right now. So why are they skyrocketing? First of all, interest rates are at all-time lows, making it easier for investors and homeowners to secure a mortgage. Yeah, it costs so little to service a mortgage now. It's nothing. It really is. It's costing more to rent in many places. Secondly, owner-occupier purchases remain dominant. Owens noted, they're starting to slip a bit. Thirdly, house prices have not inflated everywhere. The COVID-19 pandemic has triggered certain trends like the mass exodus to regional areas, pushing up regional house prices. But the value of homes in some inner city areas have actually fallen as city dwellers leave. Apartments in Sydney and Melbourne have not kept pace with house price growth in the rest of the country, HIA chief economist Tim Reardon told Yahoo Finance. We will see demand shift back to apartments with the return of migration, and this will ease demand in regional areas. See, that's it. And they'll open the floodgates, everyone. It'll become a political issue, they'll do it. 100% they'll do it at the next election. As fast as they can. You're going to have some holdouts, some people complaining and moaning. They'll do it. They'll do it. If New South Wales does it successfully, opens up, gets people migrating in, what do you think is going to happen to the other states? There'll be demands for it. Finally, mortgage default levels are quite low, with Fitch Ratings expecting loan deferrals in 2021 to be lower than they were in 2020. Fitch expects deferrals to be less than 1% this year, assuming lockdowns are eased by the end of October, the credit ratings firm stated recently. So while house prices are eye-wateringly high, they're still viable. Now that's what some people are arguing. It's not to do with the price of the house, it's to do with the ability of people to service the loan. You get in there, can you service it? Are you stressed? The definition, we'll look here, the old definition of housing stress that many people use is when lower income households, so not all, just lower, spend more than 30% of their gross income on housing costs. Because the argument is that if you're not in the lower income, you've got more flexibility, which is true. So I don't think it's a bubble until it becomes unsustainable. Equity economics lead economist Angela Jackson told Yahoo Finance. That depends on lending standards remaining robust, interest rates not going up substantially, and unemployment remaining low. I mean, I don't think lending standards are even that off the wall. If they're planning for people to have to make repayments at over 5%. So there's a buffer there. Are we going to see interest rates go up to 5% for the cash rate? We'll see. The cash rate only needs to go up a couple of points for us to hit 5% with the average mortgage, or 3% probably. We'll have to see what happens. If any of these changes, then the current level of prices would not be sustainable and we would have a bubble. But given the current monetary policy settings and general economic environment, these price rises are sustainable. Here's another thing. What if we see Evergrande fall over, all these issues with speculating in property in China? Where would another market potentially be that is quite popular with Chinese investors and could find a way to get into here? I know they've made it harder to get their money out of China and to get it in Australia. That's one of the reasons what they're doing with Bitcoin. Guaranteed why they're restricting crypto. It's to maintain control. But could that be a positive for other investors that are looking at markets? Perhaps Australia is more attractive. We handled COVID pretty well. So the danger looms. Experts flag warning signs. Though housing values are sustainable, it doesn't mean they're desirable. Jackson continued, yeah, I agree. Sky-high prices have led to greater inequality and housing unaffordability. Ray White, chief economist, Nerida Kniesby, said a key issue was the debt levels had risen substantially, with the amount borrowed for houses twice the size to that of May last year. Wow. This debt is becoming increasingly risky. The number of people that are borrowing over 6 times their income has risen rapidly, Kniesby said. 6 times your income? Is that big a deal? You worried about it? If you can manage the repayments. It's not a problem now, but once interest rates rise, recent finder data found that 1 in 7 Australians would struggle to make their repayments of rates increase. So here's the issue. What will happen then? If you're an owner-occupier, people will do whatever they can to stay in their house. And that's where the Reserve Bank are really worried, because that'll cut down on all the other money that we're frittling away. I'd love it if we all turned into Dave Ramsey and became super cheap, build up a war chest, but that's not what our brilliant economic managers want. The RBA has indicated it is watching house prices very closely and concerned about mounting debt. The prospect of large declines in property prices presents significant balance sheet risks for households, businesses and lenders, said RBA Assistant Governor Michelle Bullock. Households that have borrowed a lot to purchase a home relative to their income could, in the event of a shock to their employment status or income, find they're unable to continue to service their loans. Yeah, that's just normal. That happens in life. Now, the issue is if you have a significant number of people all forced to sell at once, that could be the problem. Or do these people have sufficient liquidity buffers, which looks like they do, or they've paid ahead in their mortgages, which many have, to ride out the time needed until the government comes to the rescue? Or is it just foolish to think the government will intervene again? Wait a minute, no, we've got an election coming up. Frydenberg has backed regulators to clamp down on high debt home loans to lessen the risk. So what's next for house prices? Though we aren't in a bubble, we'll nonetheless see house prices come down from their current highs. The reality is, however, that very soon regulators will step in and put some restriction on finance, said Kniesby. The purpose of this is to cut down the number of people taking on loans that are too high relative to their incomes and also temper investor speculation, she added. Two things will slow down housing growth, she added. There will be more supply of properties on the market as lockdown restrictions ease and the RBA winds back their quantitative easing. CoreLogic's Owens added that upswings are typically followed by downswings. With the last upswing between 12 and 17, house prices rose 40%, followed by a drop of 8.4%. See, this is the thing. They're talking about a correction to the housing market, everyone, but not... You're still going to be well ahead. You're still going to be screwed if you're trying to get in. The current upswing trajectory is at a slightly faster pace, and values have so far risen 18.5% between September 2020 and August 21. We may see a larger downturn than in the previous cycle due to a combination of affordability constraints, ongoing international border closures, and a change in lending conditions, Owen said. So there we go, everyone. What's the takeaway from this one? Let's have a talk. So, are we in a bubble? That's the real question. Is housing much more expensive than its fundamental values? I'd say in certain areas, yes. Certain parts of the country definitely seem like they're in a bubble. But, we can't know until after the event. Can people sustain it? Can the people making these green change to the regions working remotely? Will it last? Or will it all tip over? And if we see a correction in property, is it going to be the calamitous 40% decline that the RBA was predicting or modelling and others were predicting in the media? Or is it just going to be a 10 to 15% little shave that in a couple of years' time, you won't even notice? What do you think, everyone? Let me know your thoughts and opinions on this one in the comments down below. Thank you all for watching. If you're a fan and enjoy the content I cobble together here, there are a few ways you can support us. You can join us on YouTube or Patreon. Sign up for SelfWealth or Stake. Use our affiliate links for Amazon, eBay, Independent Reserve, or AussieBroadband. You can buy a merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care. I'll see you next time. Bye for now.